And just as a reminder, we really appreciate your questions. I hope you appreciate our answers. We're going to cover a bunch of things today. From my perspective, perhaps the most interesting new piece is number 5, our Supercharged new member referral program. But before we get to that, we're going to cover a little bit about what it means to be a shareholder in a public startup. We're going to talk a bit about what the market has done for us in the last month or so. Just for those of you who may be new to the whole iConsumer world, we're going to talk a bit about how iConsumer works. And if and when you're ready to sell your iConsumer stock, even though we're a long-term play, we know that some people need to or want to before others. So we're going to talk a bit about how to sell your iConsumer stock. We're also, after we've talked about the new member program, we've got a couple of things that I wanted to highlight, the Amazon Smile and Flues. And we're going to talk a bit about what other ways that you can get information about iConsumer that we have or other folks have as well. And then, of course, the questions and answers. And this time we have a little bit of a special answer period. One of our more active shareholders sent us some questions ahead of time, which gave us an opportunity to actually answer those questions ahead of time. So that's over at Shareholder Academy. All right, so the whole thing about iConsumer is that we think there are 3 pillars, three posts to our stool, right? We want you to shop, we want you to share, and actually, most importantly, we want you to learn, right? So all 3 of those things need to be in place. We want you to shop, we want you to share, we want you to learn. At the end of the day, what we're really trying to do in this long-term play is enlist the crowd, enlist you guys in making iConsumer something that's really special, right? Something that's perhaps the next eBates, perhaps the next Honey. The way we do that is we make you a shareholder. You own a piece of iConsumer. We think that by making you a shareholder, your interests are exactly the same as our interests. That what we succeed, you succeed. And if you succeed, hopefully we succeed. The best way to measure that from a financial perspective is in increased stock valuation. But along the way, we hope that you're learning more about what it's like to be a participant in an early stage startup. Even more interestingly, from my perspective, a publicly traded early stage startup. Like most startups, we think of ourselves as a long-term play. This is not the thing that you're going to get in and out of the next day. That's not what we're about. That's not what we're aiming for. And we want to make sure that you share that expectation with us. However, because of the way we did this, you're able to buy and sell our stock on the public stock market. So you can actually see what other people are valuing iConsumer at. And that's fun to do. When we talk about a long-term play, we talk about it being early stage. 3 great examples, Uber, Lyft, or even Snap. We think you should understand that our horizon is a 5 to 10-year horizon. We're not in this for the quick buck. I'm not opposed to making a lot of money in the short term. I just don't think it's something that you can plan on. I don't think it's something that you should expect. The reason we're public is that we want to have 1 million plus people participating in this, 1 million plus shareholders. And in the United States, that means that we have to do all of the things that make us a public company. That does make us a little bit different, right? We are a publicly traded early stage startup. So we have all of that. We're different, but we have this stock price. And it is fun. It's a little addictive to watch the stock price. So I'm going to tell you over and over and over again, Don't worry about the stock price. But I will admit that every time I have a chance, I go and look up what did iConsumer trade at most recently. Now, it doesn't trade very often. It's a small, not nobody follows it. It's not like, oh, I don't know, AT&T or General Motors, not yet, anyways. Indeed, our goal for a whole bunch of reasons is to make our stock, which last time I looked at it traded for 14 cents, trade for $4 or better. We talk a bit about comparing ourselves to eBates or to Honey. And again, to reinforce the notion that this is not an overnight kind of a play, I like looking at eBates, which was founded in 1998 and was sold in 2014 to Rakuten. And indeed, they've changed the name to Rakuten. Or I like looking at Honey, which was founded in the 2013 time frame. They also raised a lot of money and was sold last year to PayPal. Now, Honey sold for $4 billion. eBates sold for $960 million. We rounded it up on this slide. That's a lot of money. But what was similar to those opportunities and completely different than iConsumer is that the people who built it, the members, got zero. And at iConsumer, we've already fixed it. People are buying and selling our stock. I don't suggest that they should, but they can, and they have. They've gone shopping, they've earned stock back, and they've sold that on the stock market. Now, to find out a little bit more about what the stock market is saying about iConsumer, you need to look us up via the stock ticker, which is RWRDP. The P in the end means it's a preferred stock. So when you wake up in the morning, if you chant RWRDP, you'll be doing exactly the same thing I do. Now, which is, I'm not here to suggest that as a good idea, by the by. Here's a screen capture from this morning, actually, about what would happen if you typed in RWRDP into the over-the-counter markets portal, and you would see a whole bunch of information. The first thing that you would see is up in the upper right-hand corner there is 14 cents. That was the last trade for iConsumer, and it will even tell you if you go further into this page when that happened. We're going to dig into that. The other really important thing, another really important thing that you'll see in this page is the next line down, which right now says 12 cents, 15 cents, 5,000 by 5,000. One of the things that we look at in terms of trying to figure out the health of iConsumer stock is what is the price spread? What's the difference between the 12-cent number and the 15-cent number? By the by, what that 12-cent number is, what are people willing to pay for iConsumer stock? So somebody out there says they will buy 5,000 shares of iConsumer stock for 12 cents a share. And somebody out there is saying they will sell 5,000 shares at 15 cents a share. So the spread right now is 3 cents. And that's a nice number to watch. The closer that number, the more active, the more liquid that iConsumer stock is considered. And being active and being liquid are good things. Indeed, you can see that the average volume over the last 30 days has been just shy of 2,000 shares a day. And that has been going up consistently since this became possible. The other interesting piece of data on this page is the fact that our market cap, that is what the market values iConsumer at in total, is $15,300,000. So when someone says, what's iConsumer worth? You can say, well, the stock is worth 15 million and change, or 14 cents a share. Now that's actually a really easy number to figure out because it's really 14 cents times 109 million shares. That's how many shares have been issued to folks like you and me. The other thing that you would see if you go to this page, and this happens to be the over-the-counter markets page, but you can do this on Yahoo Finance, you could do this at Google, lots of places you can get this kind of information. You can find out a little bit more detail on which market makers. CSTI is a market maker. NITE is a market maker. So you see that the CSTI market maker is willing to pay 12 cents for 5,000 shares, and the STXG market maker is the one who's willing to pay 15 cents for 5,000 shares. And the next thing you'll see if you go here is a short history of the trading patterns of RWRDP. And here you can see that on the 12th, there were 4 different transactions at 14 cents, and a lot of stock traded on the 12th. One of the really interesting things about this all for me is I have no idea who sold that stock. They didn't ask my permission. They didn't ask anybody's permission. It was in their stock brokerage account at some stockbroker. I don't know who that might have been even. It could have been Fidelity, it could have been TD Ameritrade, it could have been Schwab. Somebody sold a chunk of stock, and that was a really interesting day. Now, everything always looks better in pictures. So here's a picture taken from the dashboard on the iConsumer site, and you can see the big green bars are the days that we had a lot of volume and the stock traded at a higher price, and the red bars are when the stock traded at a higher volume but the price went down. Because one of the things that is guaranteed about iConsumer is that the stock price will vary. It will go up a lot and go down a lot. Our stock price is pretty volatile. It comes from from just who we are. We are an early stage stock. How does iConsumer work? That is, how is it that we're trying to make money? What is it that drives the valuation? Well, we think of it as being pretty simple, right? You go shop at one of over 2,000 retailers. I think there's 2,300 now. And you are buying things. And the retailer pays us for that. They pay us a commission. And we share that commission with you, the member, in the form of stock in iConsumer. So we get cash, you get stock. We use that cash to do things like pay bills and get more members, right? So as we drill into that, each one of those purchases generates actually lots of cash, right? If you go buy a $100 thing at Macy's, we may see $5 in cash. That's our commission. By doing it this way, we're able to become cash flow positive. That is, take in more cash than we spend on things like salaries or website hosting or acquiring new members, with far fewer members than it would take otherwise. And that has the nice benefit of meaning we need to raise less outside capital. Again, that means that the shareholders are the members and the members are the shareholders. And so the people who are building the business get to own the business. So if you recall, Honey raised $70 million. eBates raised $85 million. We think we can do this by raising a lot less money. And that's really interesting because that means more of the company is going to be owned by the people who build it. So it also, some of this other stuff makes it easier to do the stock issuance and transfers. One of the complexities of being a public company is that we have to get these shares into your hands. And we're not going to go into it in much depth, but because we're doing what we do it the way we're doing it, we can do it for free. That is, if you have earned 1,000 shares from shopping, we can get that into the transfer agent's hands for free. And if you want to put that stock into a stockbroker's hands, which is what you have to do if you actually want to sell it on the stock market, we'll do that again for free, so long as you're doing about 5,000 shares. So let's talk a little bit about what it takes to sell our stock through the stock market. First, you need to get the stock out of our hands into the transfer agent's hands. The SEC says there needs to be a third party that keeps the records. And in our case, keeps the ownership records. And in our case, that's a company called Issuer Direct. Now you need to move the stock from the transfer agent into a stock brokerage account. And there are dozens of companies that have stock brokerage accounts, but not all of them make it easy for you to move your stock from the transfer agent into the trading account. Two that do are Fidelity and Interactive Brokers. Indeed, they may even bribe you to open up a stock brokerage account. So that list changes. We keep what people tell us on the website. You can always ask us, but right now the ones that we like most are Fidelity and Interactive Brokers. So you transfer your stock from Issuer Direct to that brokerage account. That would cost money, but again, iConsumer will pick up the tab if you're transferring 5,000 shares. And this is not a process that happens overnight. It takes 5 to 10 days, give or take, from the time you tell us that you want to transfer your stock, from the time your stockbroker tells Issuer Direct that they want you to transfer the stock. So keep in mind that this is not an instantaneous kind of thing. It takes a bit of time for us to transfer the shares over to Issuer Direct, and it takes a bit of time for Issuer Direct to move the shares electronically, by the by, from their books onto the books of your stock brokerage. And then when you're ready, you say, oh, Fidelity, I want to see if I can't sell my shares. I want to sell them for 20 cents, or I want to sell them for 10 cents, or I want to sell them for 30 cents. You tell the stockbroker what you want to sell them for, and the stockbroker publishes that fact. And if somebody wants to buy them for that price, poof, you've just sold your 5,000 shares. And a couple of days later, there is money in your stock brokerage account. It all starts on our site by clicking the button. This is from the dashboard. So if you go to iConsumer.com and up in the top, there's a dashboard link. One of the things on the dashboard is this blue button in the bottom right-hand corner. It says transfer my earned shares. And just to highlight that a little bit easier, there it is. So you click that and the process is automatic. So great. Now you know how to sell your shares and you think, I want more shares. And we want you to want more shares. So here are the 3 ways that you can get more shares. First, always use iConsumer when you go shopping. We have 3 different mechanisms to make that easy. We're actually going to talk about a 4th new way called Flues, but the ways are you use our website, you use our mobile apps, and we have apps for both Apple devices and Android devices. Or you can use the iConsumer button. We're going to talk a bit more about that as well, which remembers when you're using your desktop that you're an iConsumer member and you want your shopping to earn you shares. So you get the button, that's a big deal. You get our mobile apps, that's another big deal. And or you use our site because you just like using our site. Another way to maximize your ownership is you can write iConsumer a check, right? You go to iConsumer.com/invest and you can go buy our stock. People are doing that all the time. We love it if you do that because we use that money to help build a bigger business. And then lastly, and we're going to spend an enormous amount of time talking about this, the other way you can maximize your ownership and maximize the value of your ownership is to tell friends. We rely on the crowd, that's you guys, to help us crowdsource new members, right? What we have is a brand new, I'm calling it a supercharged referral program. This just came out today. You are the first people we're telling this to. And If you choose to do this, you're going to earn in two different ways. The first piece is brand new. You're going to earn 100 shares for each new member, no purchase necessary. All they have to do is try the iConsumer button on their desktop for at least 6 months. They're going to get something too, right? They're going to get a reward for doing that. But more importantly for this conversation, you, the person who referred them, are going to earn 100 shares for each new member who tries the iConsumer button. Now, just like it used to be, you're going to earn stock if that new member becomes a shopper. And what's a shopper? That's somebody who has made a qualifying purchase or purchases, somebody who's earned at least 10 shares from shopping after becoming a member. You're going to earn 150 shares, those shares traded, 14 cents last time they traded, for that person shopping. That's in addition to the 100 shares if you earned the 100 shares for them becoming a member and trying the button. And brand new, you're also going to earn $10 in cash. So if you recruit a new member who tries the button and goes and makes a qualifying purchase, you've gotten $10 in cash and 250 shares of iConsumer stock. And we think that's pretty darn cool. You don't have to remember any of that. All you need to do is go to your dashboard and not your dashboard, you go to the Tell a Friend link, and this is what you're going to see if you go to the Tell a Friend link. And we have 5 different ways of easily spreading the word from Facebook or tweeting or sending an email. You can actually tell people in person. We have a specialized link so that when that person clicks on something, we know that you're supposed to get credit. So this is the new member referral program. It's on the dashboard. Not on the dashboard. I keep seeing dashboard on my screen. It's on the Tell a Friend screen. And now, why is it that that new member is going to go shopping, right? So not only does the new member referral program care about you, the referrer, but most importantly as well, or equally importantly as well, that new member needs to feel wanted. And here's what he or she is going to get. If they try the iConsumer button for that 6 months, they're going to get 100 shares. So getting 100 shares just became free. All they have to do is stick around for that 6 months. And then if they make that qualifying purchase, by the by, people who have the button are much more likely to make that qualifying purchase. They're going to get another 100 shares. So to recap, trying the button means the button is phoning home. It's updating itself. It's getting a list of stores. It's getting a list of the great coupons. So it's staying active by phoning home from your desktop. And that qualifying purchase is the new member has earned at least 10 shares from one or more purchases. So it is pretty simple. It leads into why we have what we have. It's what is it? Our secret sauce, right? The more valuable we are, if this is working correctly, our stock price will go higher. The stock price should, but there are no guarantees, go higher if we're more valuable, if we're perceived as being more valuable. But again, part of this is learning, and there are no guarantees with companies that are public. Our stock price may go up and it may go down. It's almost guaranteed. The closest thing we have to a guarantee is that it will go up and down. How much and when, I wish I knew. I would be in a different business. But we believe that the more shopping that happens, the more valuable we'll become. And we believe that the more valuable we become, the more likely it is for our stock price to go up. So we do have some new ways, or some ways that I would like to remind you about for maximizing your ownership. We just brought on board an opportunity called Flues. Flues is a mobile-centric app that gets you cash back in store. So you can walk into your favorite Pete's and buy coffee. You may think it's too dark, you may think it's too light, you may think it's too expensive, but if you choose to buy it, you can get cash back every time you buy it. And the first time you use Flues, if you're an iConsumer member, you're also going to earn 10 shares of iConsumer stock. There's a couple of reasons we're doing Flues. It is mobile centric, and they are very much mobile centric, and it's an interesting attitude, and it gives us an exposure to an audience that we don't necessarily reach normally. So we're really excited by the notion that Flues, the fact that we have Flues as one of the things we offer, will get us new members at a higher rate. That's a good thing. The other thing that I wanted to remind you about is Amazon. And one of our shareholders, and actually the woman who is the flag waver for Flues, a woman named Sherry Yu, thinks that we care too much about Amazon. Or I care too much about Amazon. But Amazon is the 9,000-pound elephant. Everybody, almost everybody, uses Amazon a lot. And so we make it easy to use Amazon a lot. And we make a lot of money when you use iConsumer to shop at Amazon. So it's not so much that I like Amazon. I like the money we make when you go shopping at Amazon. And they do make it awfully easy. So the other thing about Amazon that is important for a lot of people is that not only can you help strengthen iConsumer when you use Amazon, but you can also help strengthen a charity or cause you care about. We link out in such a way that if you're an Amazon Smile user, that you're using Amazon Smile to help your charity. So iConsumer is earning money from 99% of the things that you buy on Amazon. We're earning really good money, like 5%. And your charity, if you're an Amazon Smile user, is earning 0.5%. So you're doing double duty. You're helping the company you own, and you're helping a charity you care about. It's important to remind folks that because Amazon is Amazon and they don't tell us how much you spent or how much you bought, we're not in a position to reward you directly for using Amazon. So we're making good money, but we cannot tell you that you just spent $100 and so we made $5. So iConsumer wins. You win because you're an iConsumer owner, but you don't get as much feedback using Amazon at iConsumer as we would like. Over time, iConsumer has been able to change and grow, and one of the ways to measure that is what we're able to charge for our stock. We call that direct investing, right? If you go to /invest, iConsumer.com/invest, if you had done that when we first started doing this, you would have paid, had you bought some of our stock, 4.5 cents a share. And then if you did it a couple years ago, you would have paid 9 cents a share. And if you had done it last year for much of the year, you would have paid 15 cents a share. And now, if you go to /invest, you're going to pay 18 cents a share. By the by, that 18 cents a share is what we use on our site to determine how many shares of stock that you're going to get when you go shopping at 2,000 stores other than Amazon. There are some other places on our site to go, or other places in the world to go, to get more information about iConsumer, right? So we have annual financial statements. One of the interesting good things, I think, about being a publicly quoted company is that we have to publish our financial statements once a year. We publish an audited financial statement. That means that the accountants have come in and made sure that we are telling everything exactly the way we're supposed to be doing it. And once a year, the halfway mark, we publish those same sets of numbers so that you can understand the financials of iConsumer. Another place to look is our SEC filings, and we do lots of them. But the really meaty one is called an offering circular. And it's, I don't know exactly how long it is. It's 40 or 50 pages long, and it has a lot of words plus numbers about what it is that we're saying we're doing, the risks involved in investing in iConsumer, and the other kinds of things that we think are important that a prospective investor should know about investing in iConsumer. So the offering circular is a really meaty document. It might actually help you if you have insomnia, because there are a lot of numbers in there that we have to put in there because this is what governs the relationship between you as a shareholder and iConsumer as the issuer of those shares. But there's actually a lot of really important meat in there as well. And we're actually in the midst of writing the next one. We need to do this once a year. So we're writing the next offering circular, which will come out in the March timeframe. The next place to look for resources are the Facebook group, right? Kim mentioned that at the top of the hour, and Shareholder Academy. We have more shareholders than most companies. We have 50,000, almost 60,000 people who are shareholders or are going to be shareholders because they've participated in iConsumer. Shareholder Academy is our place for making sure that you have the information we think is important at the same time as everybody else. One of the things that we care about is making sure that there is a level playing field for each and every shareholder, whether you own 10 shares or whether you own 10,000 shares or whether you own 100,000 shares. You learn the new stuff at exactly the same time. And that's what we use Shareholder Academy for, in addition to talking about some of the other kinds of things that are important to know about being an investor in a publicly traded startup. Also available to you is support.iconsumer.com. That's where you ask questions other than on this webinar. And we're almost at the end here. So if you have questions, I would really appreciate hearing about them. And then there's the Facebook group, which is where we try to interact with you guys as much as possible. There are a bunch of people who are active on the iConsumer Facebook group who have interesting and good perspectives. It's how we learn about stuff. If we're thinking about something new, we may put out a trial balloon in the Facebook group. So I think it's a great place to hang out. You don't have to post there every day. You don't have to read it every day. We have people who do that, and we love them for it. But as long as you know it exists, it's a great resource for you to learn more about being an investor in a publicly traded startup. So this time, I'm going to go for one more screen here because our lawyers make sure that we do things like safe harbor statements, which basically says, if I said something wrong and you depend on it, well, maybe you really shouldn't have listened to me. It is the offering circular that has all of the information that governs the relationship between you folks as shareholders and iConsumer as an issuer, as the company that you are an owner of. Now it is time for questions and answers. We did get several really well thought out questions from Matt Clerk, who, as I said earlier, is one of our shareholders and an active shareholder. And we were able to give some what I hope are well thought out, pretty long answers over at Shareholder Academy. So go visit Shareholder Academy, either not right now, but afterwards, and take a look at what Matt asked, and take a look at how I answered those particular questions. So it is time now for questions. We did a pretty general overview. If you don't have a question that you want to ask right now, that's fine. Again, support.iconsumer.com is the place to go to get questions answered of a particular nature. You know, why is this particular merchant giving us a special this week? Or how do I make sure that I have my name spelled right, or my email address, I've changed it and I couldn't figure out how to change it on the site. So support.iconsumer.com is your friend. Kim, I don't see any other questions. Are you aware of anything that I'm not aware of?
I just had one from John, and I think it might be something that the Shareholder Academy article on flus will help address. But he says that we mentioned flus buying coffee at Pete's in store, but isn't Pete's also an iConsumer store? And if I order online, what does that mean?
It's
If
the
I order like
concept of
bulk coffee.
stacking. Lovely, lovely question. Stacking is the notion that you can get cash back and stock back. And if you use, I don't know, your rewards credit card, like your Mileage Plus card, you can also get miles. So you can use iConsumer to shop in the store, you use flus to pay, and you use your Mileage Plus or other credit card to buy flus. Flus is basically a gift card program, a virtual gift card. So you use flus to pay for your coffee at Pete's in the store, or CV, or online, right? Now, this is an online question. And they will ship it to you. You'll get your stock, you'll get your cash back, and you'll get your miles. So it's the notion of stacking. And there are hundreds of stores that you can do that at, that you can use flus to earn cash back, use iConsumer to earn stock back, and if you're so inclined, you can use your Mileage Plus or rewards credit card to get what the reward of your choice. Does that answer John's question?
I believe it does, but I also wanted to chime in to, when you are stacking, be sure that you are checking out any exceptions on iConsumer. Some stores are picky or a little anti-stacking, and they will note that if you use a gift card to pay for your purchase, you might not get that stock back. Or if you're buying a gift card through iConsumer instead of flus, you might not get that stock back. But we list those out on all of the individual stores, because they determine what rules we have to follow.
Well, thank you for that. Again, thank you all for being iConsumer shareholders. We couldn't do this without you, and that's the literal truth. And I hope you have a great week, a great end of the winter. Thank you for joining us.
Thanks, everyone. Bye.